Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 15th, 2025, and we're diving into Prologis' third quarter earnings report for 2025. Prologis is a global leader in logistics real estate, and we're excited to have John, a senior analyst from Smart Stock Watch, with us to break down the numbers. John, welcome to the show.
Thank you for having me. Prologis has been a key player in the logistics real estate sector, and their Q3 2025 earnings report provides some interesting insights into their performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. Prologis reported total revenues of $2.21 billion for the third quarter, up from $2.4 billion last year. John, can you walk us through the key drivers behind this revenue growth?
Absolutely. The increase in total revenue was primarily driven by rental revenues, which rose to $2.5 billion from $1.90 billion in the same quarter last year. This growth reflects strong demand for logistics facilities, particularly in high-barrier markets. Additionally, strategic capital revenues contributed $150 million, up from $135 million, indicating robust performance in their investment management business.
And how about profitability?
Prologis reported net earnings attributable to common stockholders of $763 million, which is a decrease from $1.04 billion last year. However, their core funds from operations, FFO per share, increased to $1.49 from $1.43, highlighting their ability to generate consistent cash flow despite fluctuations in net earnings.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of $1.44 for Prologis. Based on a survey of 5 analysts, the company reported an actual EPS of $1.49. What does this tell us about Prologis' performance relative to expectations?
This is a positive surprise for Prologis. The actual EPS of $1.49 not only beats the forecast by 5 cents, but also demonstrates the company's operational efficiency and ability to manage costs effectively. The beat on EPS suggests that Prologis is executing well on its strategic initiatives, which is likely to be well received by investors.
How do you think this will impact investor sentiment?
Beating EPS expectations generally boosts investor confidence, as it indicates that the company is performing better than anticipated. This could lead to a positive reaction in the stock market, with potential upward movement in Prologis' share price.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Prologis reported an adjusted EBITDA of $1.87 billion. What does this indicate about their operational performance?
The adjusted EBITDA of $1.87 billion reflects Prologis' strong operational capabilities. It shows that the company is effectively managing its portfolio and capitalizing on high-demand markets. Their development stabilizations, valued at $641 million, also highlight their ability to create value through strategic capital deployment.
And what about their future outlook?
Prologis has provided guidance for core FFO to be between $5.78 and $5.81 for the full year, which is a strong indicator of their confidence in continued growth. Additionally, maintaining a high occupancy rate of 95.2% suggests that demand for their properties remains robust, supporting their positive outlook.